Okay, we'll now take a look at exercise 1813 on page 1107. And rather than retirement of shares, when the corporation goes into the open market and purchases their own shares in this exercise, they're holding those shares as treasury stock, meaning the corporation itself owns the shares. They could later sell them, give them to employees as part of a stock option plan, or those are kind of their, or they could retire them later on from treasury shares. But here we're going to use the cost method. We're going to put the treasury stock shares on the books at their cost. Well, let's read through it first. Again, that's exercise 1813 on page 1107. And in 2016, Western Transport Company entered into the treasury stock transactions described below. In 2014, Western Transport had issued 140 million shares of its $1 par common stock at $17 per share. Okay, number one, and we're all of these transactions are in 2016, so I'm going to put that in here. And this is on January 23rd. We're going to debit a contra stockholders equity account, treasury stock. It's going to reduce the balance of total other stockholders equity on the face of the balance sheet. And we'll put that on the books at cost. 10 million shares at $20 per share. So we get 200 million. And we're going to credit cash for that same amount. Okay, then on September 3rd, 2016, Western Transport sold 1 million treasury shares at $21 per share. So we'll debit, they'll now have more cash. So we'll debit cash for the 1 million shares, that is, times the amount we sold them per share, $21. All right, now remember the treasury stock went on the books at cost, $20 per share. So it has to come off the books as a credit at its cost, $20 per share. And that's equal to 1 million times the $20 per share that the treasury stock shares were bought at back in number one. So it comes off the books at 20 million. That excess we receive, we'll call, now your book might use a different name. It might use the share repurchase. I'm going to go with paid in capital from sale of treasury stock. And you'll see that one quite often. I know it's in our principals book, and it's just depending on the name of the business, sometimes which account title name they would use, but the meaning is the same either way. What's happened here, you guys, we sold these treasury stock shares, easy for me to say. We sold these treasury stock shares for $21 a share. They were purchased at $20 a share. Well, that $1 per share spread, which comes out to $1 million on 1 million shares, we can't call that a gain, and we can't call that and show it on the income statement. Instead, it just increases stockholders' equity. So the account will increase as paid in capital from sale of treasury stock for the difference, 21 million minus the 20 million gives us $1 million. Okay, now on number 3, on November 4th, we sold another 1 million Treasury shares. Here, you guys, when they're buying Treasury shares, it's Western Transport purchasing their own shares on the open market on number 1. On numbers 2 and 3, they're selling some of those 10 million shares back to the investing public. So on November 4th, they'll receive more cash equal to 1 million times they sold them for $18 per share. Okay? The Treasury stock goes on the books and comes off the books at its cost. Remember, it cost $20 a share back on number 1. We sold 1 million shares here that originally cost us $20 per share. So we got a credit Treasury stock for $20 million. So that would wipe out the balance in paid-in capital from sale of Treasury stock. When on the books as a credit for 1 million, we can wipe out its balance as a debit for 1 million. And now we have 19 million on the debit side, 20 million on the credit side. You guys, we can't run a debit balance or a negative balance in one of these paid-in capital accounts. So since we brought it to 0, the other debit, just like in the previous problem, now has to go to retained earnings. For the difference here, it's equal to the 20 million minus the 18 minus the, what is that, H12, or $1 million. Okay, so a different situation with Treasury stock than retiring shares once they're repurchased by the corporation itself. Don't think you'll have much trouble with that one and the Connect site. If you do, please be in touch. Thanks a lot.